there were multiple people contesting .CLUB. It was a very popular and generic name. We ended up competing for it in an auction after raising, at the time, I think we had to raise $7 million in 30 days to support the auction. That in itself is an interesting story because I essentially used my LinkedIn contacts, sent out a Reg D, PPM, and was able to raise the $7 million.
The startup investment landscape is changing, and world-class companies are being built outside of Silicon Valley. We find them, talk with them, and discuss the upside of investing in them. Welcome to Upside.
Woo!
Hello, and welcome to the Upside Podcast, the first podcast finding upside outside Silicon Valley. I'm Eric Hornum, and I'm accompanied by my co-host, Mr. Domain Squatter himself, Jay Klaus. How many domains have you bought in the last 6 months, you freak?
Okay, so if we're gonna use the last 6 months as a time frame, not that many, honestly. I've
kicked the habit.
I've been shedding the fat because I had too many. At one point, I think it was really about 3 years ago when I quit my job, I did this budget for myself, and I had to create a line item on the budget for the monthly and annual cost of my domains because it was significant. It was like a material cost, like several $100s per year. Seriously, it was like $300 per year.
To the listeners, when we started Upside, Jay and I spent more time talking about what domain we were going to get than the name of the podcast, I think. And here's the thing. We didn't just buy Upside.fm. We bought a slew of Upsides and cash cow. I don't even know what we bought. We bought so many domains.
We bought a lot of stuff, and we bought stuff related to capital and ventures. I actually just let one of our domains go last week, Eric.
What is it?
UpsideFM.com. I figured it was okay to kill that one off.
Yeah, that one seems like it was ready to go.
Pretty weak. I was like, do I want to just call GoDaddy support and get this refunded, or do I want to reimburse myself from the Upside account for $20 and keep it on the books? Not worth it. GoDaddy support, for what it's worth, one of the best support experiences of any company that I've ever worked with. Like, if their UI is really bad, like they make it really hard for you to not have auto renew on your websites. But if they renew something, you can call them and say, I didn't want that. And no questions asked. They refund it. They cancel it. It's great.
You are single-handedly going to hurt GoDaddy's churn rates by that fact.
Something, though, that's really added to the problem in the last few years is these new domain extensions. For example, freelancing school is freelancing.school. I also own the domain for selling.school, which is going to be a very fun, very profitable business some number of years from now. You guys watch out for that.
You heard it here first.
And then I had a bunch of little fun things. Like when I was playing around with freelancing school, I bought some stuff like Happy Freelance Club, Happy Freelancer Club, Just $1 Club. And Eric, come to find out, due to a recent interview with Lil Roberts last week of Zendu, that the person who owns the ability to sell .CLUB domains is based in Fort Lauderdale, Florida, is a co-investor with Lil Roberts of Zendu, and is somebody we can get on the show. And here he is.
And who is that, Jay?
He is Colin Campbell, the chairman and founder of .CLUB, a domain registry that owns the generic top-level domain rights to .CLUB domains. Based in Fort Lauderdale, Florida, founded in 2011. This was based on some new laws in 2012 where ICANN made it possible to sell new generic top-level domain rights. And if you're listening to this, dear listener, and you're saying, what does that mean? How does someone have the rights to sell .CLUB? That is exactly the questions that I had and that I want to have answered in this interview.
This is one of those interviews where we ask a lot of dumb questions because we know nothing.
I basically want to figure out how the internet works. The internet is something that touches all of our lives. It has made this the greatest time to be alive. Speaking of being alive, Eric. Ethos Wealth Management.
Oh, look at this. You snuck it in there.
Ethos Wealth Management helps people live the one life they have to live the best way they can. And you, dear listener, are lucky that you get to live in a time where we have the internet.
Speaking of the internet, if you want to learn more about Ethos, go to upside.fm/ethos. Look at that. That's a little domain, a little ethos, a little web. Man, we had it all.
You might say that Ethos Wealth Management has domain expertise in wealth management.
You could say that. I would say that.
Well, I'm excited to talk to Colin and learn more about generic top-level domains, how he got these rights, what it all means. If you have thoughts on this episode as we go through, you can tweet at us at UpsideFM, or you can email us hello@upside.fm. We'd love to talk. And we'll get to that interview with Colin right after this.
Let's bring in Philip Bautista, an attorney at Taft, Stettinius & Hollister, to teach us about trademark law. Taft is a full-service law firm known for assisting entrepreneurs across the heartland. As a reminder, the following remarks by Taft attorneys are for informational purposes only and are not legal advice. This information is not intended to create, and receipt of it does not constitute an attorney-client relationship. No person or organization should act upon this information without first seeking professional counsel. Philip, we are through the disclaimer. Thanks for coming on. How are things in Cleveland, the new home of Odell Beckham?
Very excited about the Browns for once.
As a native Clevelander, I'm also excited about the Browns.
Philip, something that comes up a lot with founders here on the show is the idea of filing a trademark. And so we wanted to ask you, can two trademarks coexist? And what other misconceptions are there of filing a trademark?
There is a misconception out there that a trademark owner can prevent another party from using the same or similar trademark under all circumstances. And while this may be the case for owners of famous marks, think of Nike or Gucci, that is not the case for most marks. Similar trademarks may coexist if the owners are using them for different goods or different services, or have sufficiently different customers, or use different trade channels. So whether similar trademarks can coexist involves the weighing of a number of different facts, but by and large, there are many instances where similar trademarks can coexist.
Awesome. Very helpful. If people want to learn more about Taft or yourself, where should they go?
www.taftlaw.com, and I'm also on LinkedIn.
Colin, welcome to the show. It's great to have you here.
I'm excited to be on, Jay and Eric.
Usually we start with a background of the guest, but today, because you have such a formidable background, we wanted to do something a little different. Let's start with a abbreviated history of Colin and the internet.
Colin and the internet. Well, I can tell you, right out of college, I went to the University of Toronto, and I didn't even know what the internet was. Graduated in I had heard of a couple of students using it, and it sounded really geeky at the time. I graduated in 92, and my brother and I and another partner started something called a BBS. That's a bulletin board service. Actually, it became the second most popular bulletin board service in Canada. And shortly after that, something called the internet and the World Wide Web started to hit, and we decided that it was better to shut down that fairly successful business and launch a new business called Internet Direct, which was a direct access to the internet. Instead of going through Pine or some of the other older technologies like Usenet, you can actually use something called the World Wide Web, the information superhighway. I'm bringing back terms that you two probably have no idea what I'm talking about.
I already have follow-up questions, but I'll let you keep going.
So we launched something called Internet Direct, which was a direct access service. And you think of companies like AOL, fairly similar to AOL. But we became the largest internet service provider in Canada. We actually took it public in the late 90s. In the middle of the 90s, we started another company after meeting a librarian who had collected software on the internet. And this was the ultimate collection of Winsock software. And we later renamed that company Two Cows, and it became a top 100 download site for software on the internet in the 90s. We sold that company in 98 to a group out of Israel. And then...
Nice timing.
Exactly. And then in 2000, we sold our internet access business as well. And the timing was very good on that one in that the stock had gone to over $1 billion of market cap, and we were locked in on that stock. And then something called the .com crash hit, started in about middle of March of 2000, when Microsoft was announced that it was going to be broken up by a judge. And that was basically the beginning of the end, and the NASDAQ fell 1,000 points. Unfortunately, our company at the time that we had merged with another company, with this internet access company, we had all locked up our shares for 18 months. when we were trading at one point in time, we had actually a price of around $19 a share. And then fast forward 18 months, without raising money, insolvency, et cetera, we ended up selling all of our shares at 6 cents a share for that company. So, the lesson I learned there was about how to exit a company and how not to exit a company. Following that, we launched a new company called Hostopia, which is a hosting and email application service provider. And we called it an ASP. And again, these acronyms are funny because if you go back in 2000, we called it application service provider. And then we later changed the name to the cloud, which is what we know it as of today. And really, it's pretty much fundamentally the same thing. In the middle of that, you had software as a service as well, SaaS. I don't know if you remember that term, but we offered hosting and email and software applications to help small businesses on the internet. And we sold those through telecoms like AT&T, Bell Canada, Vodafone, all the largest telecoms in the world. Essentially became the only player in the end of providing services to those telecoms for small businesses. We took that company public. Again, it was a small public company, IPO. We were an S1, but we did it out of Toronto, the Toronto Stock Exchange. It's interesting because back then we didn't have Sarbanes-Oxley. We didn't have a lot of the complicated regulations that existed. And you were able to raise $30 million. Today, that would almost seem ridiculous to think that you could actually do an IPO and raise $30 million. You really need to be, a $1 billion plus company before you even consider doing an IPO. So we took that one public, ran that for a couple more years, and then we were bought out at a very, very high premium to Deluxe Checks. I don't know if you remember that company, but they're actually in Minnesota, and they're expanding very quickly into the small business services sector, and they want to acquire a platform, and Hostopia offered that platform to help them expand. Now then I was fortunate to work in a Fortune 1000 company for 3 years, reporting directly to the CEO, and I was the president of the internet division. It was very challenging, but I committed to it. I did it. I made it through. I did my time, and as soon as it expired, I got back out there and looked at other business opportunities. And in 2012, the ICANN, which is the Internet Corporation for Assigned Names and Numbers, announced they were going to open up new domain extensions. So we'd seen .com and .net and .org. We've seen some CCTLDs like .tv, .co, and even I know .fm. I saw you have upside.fm. Those are actually CCTLDs, country codes that are sort of repurposed for generic purposes. But the internet community decided to open up these new domain extensions, and I applied for a domain extension called .CLUB. We actually were not the only applicant. There were multiple applicants. And this was a very interesting process in the period of the internet because you saw it was almost similar to the great land grab in America when they were opening up the West. And you literally just all you had to do was put your stake in the ground. Now, the application fee to do so and the legal fees were around $300,000 to $400,000. And it was potentially unrecoverable if you did not get the domain, if there were multiple people contesting it. There were multiple people contesting .CLUB. It was a very popular and generic name. We ended up competing for it in an auction. After raising, at the time, I think we had to raise $7 million in 30 days to support the auction. That in itself is an interesting story because I essentially used my LinkedIn contacts, sent out a Reg D, PPM, and was able to raise the $7 million to do this auction. And we went into the auction, we won the auction. Subsequently, we raised, another $5 million, and we were able to launch .CLUB. And today it has over 1.4 million domains under management and almost 300,000 live websites. And it's been an extraordinary ride, and it's a great domain extension that just covers so many areas. You can put almost anything in front of .CLUB, and it works.
I just released a .CLUB domain about a month ago because it's an idea I really love, and I'm not going to tell you what it is because then some listeners are going to go squat on it. But I was like, I'm not going to do this in the next year. So I love .CLUB. I have a lot of follow-up questions here. One point of clarification. When you said you worked at a Fortune 1000 company for 3 years, that was Deluxe Checks after they bought out Hostopia?
Yeah, it was Deluxe Corporation. They didn't like to call themselves Deluxe Checks. Everybody knows them as Deluxe Checks, but that is correct.
Okay, now let me go back to when you started Internet Direct, you said at university you didn't know what the internet really was. It sounded geeky. And then you suddenly were selling direct access to the internet. How can you help me tie that experience all the way now through .CLUB, how you learned kind of the behind the scenes infrastructure of the internet? Because it does seem just so inaccessible and opaque to someone who's just an internet user like me.
Well, that actually began 10 years earlier when I had said we had started a commercial BBS, bulletin board service, in the early 90s. My brother and I, that wasn't new to us. We actually launched a BBS in 1984 that was the TRS-80. So I'm going back even further now. It was something that we did as a hobby. You had 1 or 2 phone lines in your house, and you'd connect your computer up, and you had the software, and you'd get users logging in. One user would log in with their very slow modem, and then that user would log off, and then another user would log in. It was just a hobby bulletin board service. After graduating, my brother and I decided that it was a good idea to try to launch a larger one, and that's what we did. We just simply launched it, and as we were doing that, we recognized and understood the need for connecting to the internet. We used to do seminars, and I remember we would email the White House, and we would get a response back, and it was fascinating to see like 30 people in a seminar, and you send out this email and you get this response back, and everybody go, wow, that's so amazing. Like to be able to email the White House and get a response back so fast. And now, obviously it's an autoresponder, but back
who was responding to that?
Yeah, exactly. Back then it was pretty.
They used to have unpaid staffers in Washington. Now you can't have unpaid staffers anymore.
Yeah, exactly. I don't believe they actually owned whitehouse.com. I think that was another site. There's a history behind that one.
That was one of the first websites that I was aware of as a young person. Okay, well, moving forward here to this 2012 announcement from ICANN. Can you help explain who ICANN is and why they had the authority to say we're opening up new domain extensions?
Yeah, so think of ICANN like the United Nations, in a good way and maybe in a not so good way. It's extremely bureaucratic. It does represent every country in the world. It's a multi-stakeholder model, so it's slightly different from a governance perspective than the United Nations, but because it also includes, other groups, commercial interest groups, even domain investors. It includes users. It includes, a lot of different groups that come together, volunteer their time, and eventually it moves all up to a final board of directors who makes the decisions. This organization has collected hundreds of millions of dollars from these auctions and from domain fees. And, it's something that most people don't really think about, but every domain is taxed. It's taxed at a rate of 25 cents to the registry. .CLUB is the registry, and 17 cents to the registrar. And, companies like GoDaddy are the registrar. So every domain that is sold on the internet is taxed at 43 cents. And that's globally as well. It's actually, for all its criticism, I think it's functioned well, given you are representing, every country in the world. And it has its challenges, but I think it's actually been able to move forward and make changes. They're talking about opening up the domain extension again for a new round. They've been talking about it for many years. The last time was 2012. So maybe we'll see something in 2023, 2024. And there might be an opportunity for new domain extensions to be added to the zone file. And what's popular there, obviously a lot of the more popular generic extensions like .CLUB have been taken. What's also popular now is that brands can also get their own domain extension. And we're starting to see some of those brands use them.
How many domain extensions are there, active?
That's a good one. There's probably about 1,000 or so, or maybe even a few more. And, again, there are a lot of brands that use them. There are a lot of domain extensions that are just almost meaningless. There really are, 200, usable domain extensions that you could see a company using. There are, if you think of a domain name or a domain extension, you can think of it as a pure generic, like a .com, a .net. I call it a generic with meaning, like a .CLUB or a .shop, .guru. Then you have a niche domain extensions, like ones like .photography or .live or just very niche, like, you can go all the way into any category. Think of magazines, the way that it broke out. You started with a few magazines, and then you all of a sudden you have 1,000 magazines. And television, you started with a few television stations, and all of a sudden you have 1,000 television stations. Domain extensions are sort of evolving the same way.
When you buy the right to one of these domain extensions, are you buying, like, what can you put before that domain extension? What are you actually buying? Are you buying every possible permutation of everything before the dot?
You actually get, everything. There are a few words that are restricted, maybe not words that you might think, something like some medical organizations, global medical organizations. There are like a few words like that are restricted, but for the most part, you get every single name that's available on the zone file. We sell the names competitive with .com at a wholesale price of $8.95. Some others will sell the names for much higher prices. You get into, again, those niches like .cars or .auto. They might sell for $500 per year. So they could be very expensive depending on the domain extension.
$8.95 sounds great. I looked up upside.club and it was 900 pounds. So
yeah. So, and you bring up a good point too. There's that not all domains are open and for general availability and accessible at the $10 a year price point. In the case of .club, we have premium domains and we're allowed to sell those premium domains. Upside.club is a premium domain. It sounds like it's for sale for about $1,000. Try buying upside.com though. What would that cost, right? So you might be $15,000. To be quite frank, you're probably a lot higher than that. Single word .coms can sell, usually sell in the hundreds of thousands of dollars. And I actually recently acquired a domain, paw.com, and it was obviously in the hundreds of thousands of dollars. One of my companies that I invested in was a company that did dog products, and the name of the company was treatedog.com. Just not very memorable, and the company was doing fairly well. We've got great products, but then we decided to rebrand the company. I knew somebody who owned the name paw.com, and we were able to acquire that. We acquired paw.ca, and of course we acquired paw.club for the company as well, for something we'll launch down the road.
So when you guys raised the $7 million to get the rights to .club, was that a one-time purchase? Is there like a licensing fee you have to pay outside of the tax per domain? Like, what does that model look like?
Yeah, so ICANN was not selling the GTLDs. What they were doing was putting them up for auction if there were multiple bidders. If there was one bidder, you simply paid your $180,000 application fee plus the legal fees, and you received rights to that domain. Once you pay that fee, you do not pay any other fees other than the tax I talked to you about earlier, the 25 cents per domain tax. And there is a minimum $50,000 per year of fees to be paid to ICANN. So that's pretty much it. However, if there are multiple people who put their stake in the ground, and there were with .club, then it would go to auction and it would bid up in the millions. Now, there have been some other names that went to the ICANN auction. They've sold, I think .shop sold for $42 million. Google was the winner of .app at $19 million. And the big one was .web, which VeriSign ended up winning at about $125 million. So you can see it's real estate, and there's a lot of value in owning a domain extension, especially one that can be generic enough but have meaning. Like .org, it has meaning. It means not for profit, and because of that, I'll register a .org over a .com because of its meaning. .club is something very similar as well.
How did you think about the value of this? You've taken a couple of companies public. So are you looking for a similar outcome for .club? Is this something that's just about cash flow? I'm curious to hear how you and your investors valued that.
Well, I mean, I look at every business a little differently. In fact, because I've done it a number of times, it actually becomes a little formulaic. And when I look at a new business idea, I think about how defensible is this idea and how scalable is this idea? I've launched some companies before. We did an advertising media company. We were able to acquire all the taxi cab tops in Toronto and Montreal. Sounds like a great business, but it's not very scalable. It's high infrastructure costs, and it's a challenging business, especially given what's, happened in the taxi industry. But this one, going into it, I'm thinking, one of the factors I consider when I do start a business is how defensible and scalable. The fact of the matter is, even if Microsoft tries to give away, or Google tries to give away team, I think Google actually owns .team, and they make it for free, people are still going to buy .club. And once someone registers a .club and they love a .club, and we've got many great websites, we're one of the highest used new domain extensions. We've got companies like Chaos.club, a couple of Victoria's Secret models who launched an e-commerce site, a high-end products e-commerce site. Once they become members in our club and they're benefiting from using this name, they're there for life. I mean, it's very hard for them to shift or change that domain name unless they go out of business, or unless they decide to do something different. But the reality is, given the cost per domain name, it's very inexpensive for them to keep it. So once you've got it, once you've established that moat, it's hard for companies to take it away from you. That's the kind of business I'm looking for. And the second thing I'm thinking about is scalability. The fact is, .com's already got 120 million domains registered. .club's only got 1.4 million domains registered. So we've got a lot of room to grow the company. And so those are the two things I really think about when I'm, setting up and launching a new company. And that club, there couldn't be a better formula for a business. The challenge with the domain extension is, and it's a challenge with anything, is you need distribution. And who's the number one in the space when it comes to distribution? It's GoDaddy. And there are 200 other registrars globally. In China, it's not GoDaddy, it's Alibaba, and a couple of other companies like Tencent and Baidu. But there are registrars all over the world, and you need to be able to connect with them. And how do you do that? It's relationships. So I've traveled, to China 15 times. I've gone to 50 different countries with my staff, and we've met with all of these very interesting people around the world who are in this industry, and we've connected with them, and we've been able to build that relationship. And that obviously that takes time, but it also costs money. These companies, when they want to place them, on the shelf, they want money for that shelf space.
Is this like a pay to play type thing where you're saying we'll give you a better deal, we'll give you a better wholesale deal, or is there like a non-quantitative aspect to this as well, where it's .club sexy, it's in right now? Like I'm equating it a little bit to the shelf space in a grocery store, where you can pay for the best shelf space, but if you're the hot product, they want to put you on the end cap. Is that fair, or is that not correct?
That actually is fair. .club has benefited from the fact that it is very relevant. You can put almost anything in front of it. It works. GoDaddy, for instance, does not sell their search traffic. They're very much whatever's the best and most relevant for our customers, we are going to serve. And so they serve up .club very well. We're one of their top domain extensions on their platform. Google's another one. They're another company that actually sells domains. I don't know if you know that, but they do. And I think we're their number third or fourth most popular domain extension on Google. And again, you can't buy that stuff. Now, what you can do, though, is they have some sponsored links. They have some sponsored icons. You can get the .club put beside the search bar. So they sell those kind of things. And we invest about $2 million a year in our marketing efforts to continue to promote .club through the registrar channels.
Yeah, whenever I look for domains, I go to instant domain search just to see if something is available. And that's where I first saw .club. So I was going to ask about distribution and marketing. I'm glad we touched on that. What does the actual technology powering this look like? When you got the ability to sell .club, how difficult is it to actually allow me, Jay, to register a .club domain and do that at scale?
Yeah, we have a contract with a company called Newstar, which, by the way, was just bought by GoDaddy. So very interesting. But they actually run the root servers on the internet for .co, .us, .biz, .club. They actually are the ones who do all of the server management and store the databases. And they have the central root servers so that we would then propagate to different DNS servers globally. The only other servers you have there are servers in China that we hire a company in China to operate. And you can imagine what the servers in China are for, but they're meant to monitor the domain registrations and take down names that are objectionable by the Chinese government, and the Chinese government has control of those servers.
Are you saying that there's really like one major company that kind of controls all the servers and underlying technology for a majority of domains?
No, not at all. Just only with respect to an individual domain extension. So the company that controls .com actually also controls, they run their own servers, and that company is VeriSign. But they actually run their own servers. Newstar, there's another company called Affilius, and they run like .info and some other domains. Google runs their own. So it's a choice of the registry. Do you run your own servers or do you outsource that? We preferred to outsource it given the critical nature of running these servers. Obviously, they cannot go down. The internet cannot go down, and if the root servers go down, then you would have some issues in setting up new domain extensions or deleting extensions. There are DNS servers around the world with backups, and so generally you don't see the internet go down per se. But you know what? The root server obviously can't, has to be careful. We wouldn't want a situation where that takes down other servers as well.
So root server is one area where you have to decide to build or buy for a registry. What other areas do you have to decide as a registry, okay, we need a vendor here, or we can bring this in-house?
So, I mean, there's a few things like data escrow. I mean, it can get a little bit technical, and they're pretty minor. The reality is the big investment here is sales and marketing, and investing in the channel and meeting with companies like GoDaddy. And first of all, convincing them that your domain extension has merit and is of use to their customers, right? That's the first thing, because nobody wants to sell crap. Let's be honest. Like if it doesn't make any sense, they're just not going to sell it. It doesn't matter how much money you throw at them. And then second, you do have to make an investment to promote these names through the channels. And like I talked about earlier, some of the companies like GoDaddy have sponsored links. Like imagine like a Google. Google has sponsored links. So, again, we invest pretty heavily in those links as well. But for the most part, .CLUB gets an excellent search just due to the fact that it's a popular domain extension.
And there's some sort of network effect here, I'd assume, too. The more people who are using a .CLUB domain, the less you might have to pay for sales and marketing because someone's already seen it. They've already thought about it.
That is absolutely right. And it's a hard one to sometimes convince investors of that. So I'm glad you mentioned that. Because, when I was actually working in Canada in 1998 with a group called CIRA, we started, again, it was a multi-stakeholder model called CIRA, the Canadian Internet Registry Authority. We launched .ca in Canada, and 90% of names in Canada were .com. Today, I'm in Canada right now, and you can drive around and you'll see that at least 50% of the names in Canada on the internet are .ca. So what happens is as more and more people use .club or .ca, .tv or .fm like yours, the more and more people who use that, the bigger and bigger your domain extension becomes, and it creates more and more momentum.
How big is your team supporting this business?
We have about 18 people globally. We have staff in China, India, Ukraine, Philippines, Canada, US.
You mentioned this $8.95 wholesale price per domain. Is that per year?
That is correct. And registries can mark it up as much as double, or in some cases like GoDaddy, if you're a member of the domain discount club, I think they mark it up like $1 or $2.
Age-old question, especially for startup founders. They get excited about a name, they look for the .com, it's taken, they start looking at other extensions, and they ask themselves, does this have as good of search value as a .com? Is that a real question, or is that a fallacy?
I think it's a real question. The reality is Google does look at the domain name, and that's part of if you have an exact match inside a domain name, it can have some pretty powerful SEO. If, for instance, you search Coffee Club or Soap Club or Chaos Club, or another one, a popular one is Gear Club. They were actually an app online, a car racing app downloaded millions of times. But if you search any of those names, even without the dot, gear.club, comes to the top of the list. The reality is Google does look at the domain name. Now, one could say, well, I could buy gearclub.com, but the issue is it's sold, or if it's not sold, a domain investor might be trying to pawn that name for $10,000, $20,000. So here's my opportunity to go buy a domain name for either $10, or maybe it's a premium name for $500, and we sell some premium names for as low as $20. I mean, it depends. You can actually get a great domain name for a very low cost on a new domain extension. Think about your podcast right there. You chose a .fm, upside.fm, probably because you didn't want to go invest the money in it, upside.com, or if it was already, or it might have already been taken. So it could have been, even if it's not taken, a domain investor might be selling that for tens of thousands of dollars. And an example of paw.com and paw.club and paw.ca, we paid 50 times more for the .com than the .club and the CA.
How do you as the registry determine what is a premium domain? Is that a manual process, or do you have some sort of list of here's best practices, this is what makes a premium domain?
I think when we first started out, it was exactly that. It was all manual. We hired 2 companies to help us figure that out. We left a lot on the table. The reality is, as time has gone by, we have better software systems and that we've developed to try to identify what are the best domain names of best value. One of the issues by letting names go at a very low cost on the front end is a lot of domain investors grab them and they take a lot from the zone file. And you see that with .com. Obviously, we saw a little bit of that with .CLUB. Probably about a third of our names have gone to domain investors, and they're good names. And when a domain investor takes them off the market, it's sometimes very difficult for a new business to find that name, or if they do find it, they're going to pay a high price. So sometimes by having a slightly higher price than your general availability price that we offer, you can limit the number of domain investors who take those names off the market.
How big of a market is the domain investor market? Because some people, they've probably run into something. I know I've run into a domain that I wanted that said it was sold. I go and it's a Tuco's website saying it's for sale. So how big is that market, and what are the players like in that market? I've just never known anything about it.
Well, I think the largest player just sold to GoDaddy. I believe it was 100 million plus for his portfolio. It's Frank Schilling and his company called Uniregistry or Uniregistrar. I think he kept Uniregistry. He sold Uniregistrar along with his domain portfolio. I know other domain portfolios. These are individuals who've registered tens of thousands. I think in the case of Frank Schilling, it was hundreds of thousands of names, primarily, .com and some of the other more popular names that you might get from a .club or a .ca or one of those other ones, but primarily .com. But I've seen, multiple deals where people have sold their portfolios for tens of millions of dollars. And I've seen individual names, names like Zoom.com, I believe sold for around 2 million. There was a name 360.com in China that sold for 17 million. So, some of these things can go a little crazy, once you get out there and if somebody really wants that name and it's a good name, people will pay for it.
What types of questions are we not asking because we just don't even know to ask about the world of domain registry?
I think, some of your listeners might be interested in registering for a new domain extension in the next round. So what would be involved in doing something like that? I'd say that it's not, the rules that applied in 2012 will not apply in 2024. Let's just go with that for now. What do I mean by that? In 2012, it was pretty much an open season. There were not a lot of restrictions around how the names came to market and how they were put up for auction. For instance, in the case of .CLUB, when it went up for auction, it went up for a private auction. And what that meant was that the bidders in the auction who lost received the funds from the winner. So if a domain extension was sold for $10 million and there were 2 other bidders, the other 2 bidders would receive $5 million each. So what that's going to do at the next round is, again, now you'll have GTLD or domain extension speculators who come into the next round thinking that they can essentially win a lottery by investing this $180,000 application fee. And now the legal fees are much lower. You probably can do it for $25,000, $50,000. So let's just say it's a $200,000 investment and then hope they can sell that investment off, in a private auction for $1 million or $2 million. Some people might get away with that, but the reality is I think we're going to see a lot more speculation on the next round. And the individuals who go in there with a business plan, and that business plan is very specific and doesn't necessarily rely on heavy distribution, I think those are the companies that will succeed. So a niche domain extension that can be used, can be sold, that you might have a platform that you can attach to it. You might have some of your own distribution that you can sell through. Those are the kind of companies I think will do well. Right now, the reality is because of the number of domain extensions, the investment made in domain extensions, it's very hard for someone to crack that shelf space. And it just ain't going to happen. GoDaddy, they've got a lot of good extensions, and they've been 99% of the names that would have been available in 2012 are gone. So you're now fighting for crumbs. So if you're going to do that, you need a very unique business model. My team and I, we've come up with a couple of very cool business models. We're not going to talk about them now, but we will be applying for new domains in the new round.
On your .CLUB business model, you mentioned $2 million per year in marketing. I'm guessing that's one of your largest expenses. Besides building relationships with distributors, where else does that marketing spend go?
We've done a number of trade shows. And again, .CLUB, and fortunately or unfortunately, is so broad. So we've done trade shows, Subscription Summit, South by Southwest. We did the Bar and Club Show in Vegas. We've done many years. We've done the Country Club Show. We've done many domain investor shows. We've done dozens and dozens of trade shows. We try to connect with the industry. We've done PR articles for a number of different industries to try to promote .CLUB. It really does apply to so much, and it really is like taking on a fire hose. So we've obviously tried to direct that money to where we get the best return on an investment. But it really is all about building up with your industry and getting that industry excited about the domain extension. Don't think that you're going to launch a domain extension and they will just come, because they won't. It's a tough slog. Sounds like a great business. I think it is one of the greatest businesses I've ever done because of defensibility and scalability. But you really got to invest a lot of money to make it happen and get some investors who have a very patient time frame, because when you're dealing with ICANN, you're dealing with a very slow time frame. And when you're dealing with the domain extension launching, nobody knows it exists at the beginning. And it takes you 10 years before somebody realizes, oh, I didn't know .fm existed.
How long did it take you to get from 0 to 100,000 purchased domains?
We sold 30,000 names on the first day. This is not typical. Again, Club was a popular name. It sold for a lot of money in an auction. We were hit about 100,000, I think about 30-day mark.
Are there any rules against you being a domain investor on .CLUB?
The fact is I don't own a lot of, I own maybe a handful of names of .CLUB. There's no rules against it. The fact of the matter is we have 200,000 premium names already, and I'm the majority shareholder, so I feel like I have enough of them. Oddly enough, I invested in .shop names. I bought about 500 .shop names when it first came out. I think .shop's another great generic with meaning, and I think it's got some potential down the road as well. And so, when it first launched, the very first day, that's when I registered the names. I think that's probably the best opportunity if an investor, when .web comes out, that'll be the next big one. If a domain investor wants to get in there, is to figure out what names that might work as a premium. But again, even a domain investor has to have a very patient time frame here, because again, even with the .web, it's going to take years before it's used and people start valuing that domain extension and are willing to pay good money for that. But if you can buy domains at the general availability price, which is the low cost annual fee, and you can get it on the very first day it launches, even before the first day it launches, usually pre-sales, there can be some good opportunities there, because you're buying domains. Like I bought prescription.club. I think, in the end I paid like $100. I'm sorry, prescription.shop. In the end, I paid $100 for that name. I know that name's going to be, worth 10, 20,000 one day. So, that's the kind of investment you make in these type of domain extensions.
If I'm listening to this and I'm an opportunistic person and I'm thinking, maybe I want to get in on domain investing, you mentioned these pre-sales. I imagine the process is not going to GoDaddy the day these are released and buying these things one at a time and walking through the checkout process one at a time. How does one access that process?
GoDaddy will announce a few months in advance that they'll be launching these names in pre-sale, and then you can sign up to GoDaddy. I found that working. I did buy my .shop names through GoDaddy because they have a pretty good system for snapping the names. It becomes at that point, if 10, 20, 30 registrars want one single name. The one who wins that battle is who can snap the name the fastest with their servers. And GoDaddy's got pretty good technology around that.
Are there examples of extensions going out of favor, so going the opposite way?
There have been some examples of some domain extensions where they just promote numbers. There are a lot of spammers that grab onto them. We see, in some cases, millions of domains registered. Nobody can understand why they're doing it, because again, you've got that ICANN tax and the names are just, the zone files are just full of spammers and phishers. The responsible domain extensions like .CLUB, we have very extensive monitoring systems, and we shut down, spammers and phishers, and we have one of the lowest ratings in the industry. You really don't want that corrupting your database, but we've actually seen names like .science. There are a few other ones where it actually went into Chapter 7, I believe, and they're then ICANN has a process if they're not, able to sustain as an entity. ICANN has a process to move them to other entities or take them over so that the actual end user doesn't suffer the consequences of the bad behavior by these operators.
How big are influencers in this space? Like, I imagine if you had Kylie Jenner .club, you would have a lot more people using .club. Is that true or not?
I don't know. I mean, when we first launched, we had a party in New York. We had invited Curtis Jackson into the party, 50 Cent. We had sort of we went out in style. So it was a lot of fun. I don't know how much that really matters when it comes down to it. What really matters is the domain name. Does it make sense for your startup, right? Does it have good SEO potential, which you talked about earlier? Can you get that SEO potential from a new domain extension like .club or a .shop? Those are the things I would consider. Now, I'm going to go out a little bit here because I see this a lot when I go to trade shows and, startup shows, and I see the trend has been to launch names that are misspelt .coms. And I understand why there are some trademark advantages to doing something like that. But the reality is you're not getting any SEO from that because Google does not recognize a misspelled name and gives a lot of SEO for that. Obviously, you have to get the content and put the content in there in order to get the SEO. But I can't tell you how many times I've seen a simple domain name get the top search spot and the impact that they can have. So if you can have in your domain name the target audience you're trying to win or sell to, that can have an impact. And that's where the new domain extensions can play a role because you can actually get, great domains at very low cost, where some of those names for .com would be very expensive.
One last question from me. The 50 Cent question. Did you give him into .club?
We did. In fact, if you think, I don't know if the site is still up. I have not looked at it in a few years, but I believe I should check it right now. Into.club. It's
oh my gosh, I didn't even put that together, Eric.
Come on.
It's actually 50 Cent in the club. 50 Cent in the club, I think, was the domain.
All right, Colin. If people want to find out more about you or .club, where should they go?
They can go to www.get.club. And if they're interested in premium domains, they can go to www.names.club. And you'll notice I put the www in there just for the old days.
All right, Eric, we just spoke with Colin Campbell of .CLUB. Where do you want to start this conversation?
What an awesome potential business. Yes, there's a huge hurdle to get there. But once you get there, I feel like this is one of those things that just spits off cash and just like, oh man, it just makes me so jealous that people have businesses like this with that kind of protection, that moat.
For sure. I am really impressed that he identified .club as the generic top level domain that he wanted. Because, put yourself in the shoes of 2011, 2012, where the ICANN says, hey, you can apply for any generic top level domain. You have infinite words in the English and other languages. How do you choose? To narrow in on .club, I think, is kind of a stroke of genius because, something that I brought up in the interview that he said that he believes and hasn't really held up in other conversations. There is a ton of network effects to this. Not only because the more .club domains you see, the more you're going to be aware of it, the more you think about it in your own strategy, but the name itself has meaning, to use his terminology, that you're going to be bringing other people into a group or community probably using this domain. So innately, like even that very intentionally is getting in front of lots of people because it's a club. So to me, something we didn't spend enough time talking about is just how he landed on .CLUB as what he was targeting amidst all of the other things that he could have targeted. And with a $7 million war chest to win the auction, you could have gotten just about anything.
Yeah, I mean, that's a pretty good size. I think he said that there were a couple that went for in the 40s, but it sounds like most stuff was in the 185 range, which is the no one's competing with you for this extension range. So I love the .CLUB. I think it makes inherent sense. The word itself carves out a niche, so it's not going to compete head to head with .com, while at the same time is scalable enough that, I mean, it's a large niche, right?
Totally. Really smart. Really, really smart. And I'm glad that we got to spend so much time just answering some of our basic nerd questions of like, how does this all work? How did you get involved in this? Like, he has a history since the 90s of getting involved at early stages of internet infrastructure and building internet infrastructure companies, going public a couple of times with those companies. Like, what a wealth of experience. And if I'm an investor and Colin comes to me and says, hey, I think I want to buy the domain registry rights for .CLUB, do you want to invest? Not surprised he was able to raise $7 million and able to do that. And to your point, Eric, it just seems like a cash generating business very, very quickly.
It sounds like there's a lot of upfront. I mean, it didn't happen overnight to where they came into profitable because, like you mentioned with the network effects, one of the things with network effects is to build those network effects, you're usually burning money. And once you kind of hit that, there's a phrase here. Once the flywheel gets turning fast enough, there you go. There's a good business cliche. Once it gets turning fast enough, you don't have to put as much force on keeping it spinning. And I think that they're kind of in that period where they're going from, we've been putting $2 to $3 million a year in marketing into this thing for almost a decade now. And that flywheel is starting to spin pretty fast.
He said they have 1.4 million domains now under management, 300,000 live websites. I would be interested to hear what the comparable would be to other extensions like .com, .co, .org, how many domains under management versus live websites. I was surprised to hear he mentioned a pretty high percentage of domain owners are squatters or like domain investors, essentially. So I'd be interested to just understand more about that comp of how many people are just buying domains and sitting on them for other extensions.
I think if we can just do a little bit of, let's assume that he has a fairly standard law of large numbers here, ratio of live to domains under management, which I'm assuming are websites or whatever. There would be, 300 divided by 1.4, it's called 25%. So he mentioned that .com has 120 million websites. So you're looking at 30 million of live websites, 90 million of things that are just sitting there.
Is that a note that you took in the interview? 120 million live websites for .com?
That is a note. He mentioned that little fact.
This is life-changing. A little behind the curtain here, dear listener. Eric just now started taking notes during interviews.
Okay, that's not 100% true. So historically, I take notes in notebooks, and I love taking notes in notebooks. It's actually my favorite way to take notes because I scribble, I doodle, and then it generates like the thoughts that I was having at the time. This outro isn't about me, Jay, but let's let the listeners know a little bit here. Then I started saying, okay, you know what? I realized that I'm not asking as good a question, so I started focusing, and I couldn't figure out a good solution. I tried Evernote, hated it. Tried Notion, didn't work. Tried just doing it in little text documents, didn't really work. And I said, you know what? I think I can handle this. I think I can handle the interview without notes, which was great for me, not great for Jay. I thought we asked some good questions, but now I've found Rome Research, and it has been a game changer.
Game changer. And now we benefit by little notes like that. Eric, something in Colin's background that he talked about, we mentioned that he took a couple companies public. One of those companies he took public, his stock was locked up, and he said the price went from $19 per share down to 6 cents per share. That's a big dip. That's a big loss. And that is a big learning experience. And again, another reason why if I am an LP or somebody that Colin's going to and saying, do you want to invest in this .club business? Some people may look at that and say like, wow, what a failure and loss of value and wealth for investors. Other people might look at that and say, I bet he learned a ton from that.
Yeah. As an investor, when I'm looking at this and I look at the business model too, I see $8.95 wholesale price paying something like, what was it, 40 to 50 cents, 43 cents taxes. So you're sitting there at $8.50 in gross profits effectively. There's no incremental cost to launching a new domain. So every single domain that you register, $8.50 in gross profits, and then what's coming out of OpEx? You got $2 million a year in marketing. So we can do a little bit back and do a little bit of math and what else is spent if they're at break even. I mean, once this thing starts going, there's no really stopping it because of those gross margins are just, they're infinite almost.
What do you think about this looming opportunity of more generic top-level domains going for sale? Do you think that is as big of an opportunity as .club and some of the other extensions were back in 2012?
I think there's two answers to that question. One, there's an answer for .club. Do they have a top-level domain that makes sense for them to buy that they kind of get synergies with by having that get popular as well as .club get popular? I think there's also the question of, will there be interesting extensions that emerge from this? Yes, I think there will be individually, but what's the business plan? Like .gg for gaming, I feel like is going through a big pump right now because everyone has a .gg for gaming. Where can you niche to that it makes sense? And I think one of the biggest things for this entire space is the generally accepted principle that if you don't have a .com, you get worse rankings on Google. I feel like that is so just like common knowledge. And I don't know if it's right or wrong. He mentioned it doesn't seem to be.
In my experience, I don't think it's that true. I do think there's probably like a class system, whereas a .co is probably going to be better off than .design or .guru or something. But what I found with freelancing school as an example, I am getting a heck of a boost in where I land on Google search results for terms related to freelancing because my domain is just freelancing. So even though .school may not be a very common domain extension because there's meaning in .school and it's an educational meaning, and because the domain itself is just the word freelancing, that has given me a boost that I do think is very material.
Yeah. So I think getting that education out, if I was .club and .gg and .fm and I was the owner of all those, I'd have a little nonprofit lobbying group out there beating down the SEO doors to say, stop spreading this myth that .com is the only way to go. Because you can see there are a lot of companies who would rather spend $19.99 on a .club, but they just bought a domain for $8,000 because they had to have that domain.
These premium domains are what really get me though, because you find stuff that you're like, oh, this is available. This would be really good. For example, after this conversation, I looked at freelancing.club. I would love that domain. It's a premium domain. It's going to cost me $795 to purchase, and then as a regular renewal fee of $20 per year. Do I want to make an $800 investment for something that I don't have an immediate vision for? I don't know. At this stage, not really. And some of those premium domains are kind of frustrating in that way because there's nothing inherently different about them other than they think they can sell them for more money. You have a hey.com email address, similar model with them for 3-letter names. Like I wanted j@hey.com. That would have cost me $1,000 a year because it's premium, and I'm just not going to pay it.
But I like that. Wouldn't it have been great if when they did launch .com, you would have had to pay for those? So there isn't someone who just happened to know about .com early on and got, j.com. I think you said it was a bookstore or something, or
it was a bus line.
A bus line. They probably happened to have an employee who was around in the early ages of the internet who said, oh, this is cool. I'm going to register a bunch of stuff. And he registered j.com for J thinking, hey, maybe this will be a big thing. It's the same thing with Twitter. People registered it and then they were like, oh, let's just sit on it because why not? It's like free. Like when we wanted Upside and there's an inactive account that has @Upside on Twitter, there's no refreshing mechanism to get rid of that. So you just have it forever. Whereas at least in the domain space, there's a refreshing mechanism of you have to pay for it every year. But still, once those things become worth $100 and the refresh is $10, well, hey, you hold it for 10 years and you're break even. So I think that there is demand for more domains because brands get annoyed. You start a new business and you want to launch something and you want a .com and it's not there. And it would be nice to know that like .club is like this thing when you have a community around it, or .gg is esports, or .ca is Canada. So I think that there's definitely demand here. I think that adding another domain makes sense if the business model is right. Obviously, you have that onboarding time where it makes sense. I love the analogy that we talked about in the interview of GoDaddy. GoDaddy being essentially a grocery store and all these domains searching for shelf space. So that's where they spend a lot of their marketing on distribution. But he mentioned that there could be other business models that are not driven by that, kind of like disrupting with a D2C, the grocery stores, disrupting with content or something else. I think that this next round of domain extensions opening up is going to be incredibly interesting for the space, because there's going to be a new generation of entrepreneurs who are going to think about the business models differently.
Well, Eric, we have a domain squatter with upside.club. He has it listed at auction for £900, so we know where he lives.
I will throw something out there right now. Dear upside.club domain squatter, if you want to donate that domain to Upside, we will read an advertisement on this platform for whatever you want for a month. Is a month fair, Jay?
Yeah, a month is fair. Or, dear listener, we'll throw this out to you. If you have something that you want to sponsor this podcast with, and you want to buy upside.club from whoever the squatter is and trade it to us in return for advertisement, also open to that.
Look at this. Advocating for Upside. We're, what's that called? When you mobilize your listeners to do something.
Let's see how it goes. We'd love to hear your thoughts on this episode. You can tweet at us at UpsideFM or email us hello@upside.fm. If you get that domain for us, we can also open up an email address, hello@upside.club. So another little incentive there, Eric. Create a private means of communication.
Wow.
That's all for this week. Thanks for listening. We'd love to hear your thoughts on today's guest, so shoot us an email at hello@upside.fm or find us on Twitter @UpsideFM. We'll be back here next week at the same time talking to another founder in our quest to find upside outside of Silicon Valley. If you or someone you know would make a good guest for our show, please email us or find us on Twitter and let us know. And if you love our show, please leave us a review on iTunes. That goes a long way in helping us spread the word and continue to help bring high-quality guests to the show. Eric and I decided there were a couple things we wanted to share with you at the end of the podcast, and so here we go. Eric Hornung and Jay Klaus are the founding parties of the Upside podcast. At the time of this recording, we do not own equity or other financial interest in the companies which appear on this show. All opinions expressed by podcast participants are solely their own opinion and do not reflect the opinions of Duff & Phelps LLC and its affiliates, Unreal Collective LLC and its affiliates, or any entity which employ us. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions. We have not considered your specific financial situation nor provided any investment advice on this show. Thanks for listening, and we'll talk to you next week.
Never mind, bro, that can't be matched. I'm lighting it on fire, used to run victory laps, and still I'm not even tired. It's all about the timing, yeah, that's what they say. Well, I'ma keep